Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 15th of October. Starting off with the FTSE 100, which got a little kink in the RSI trace there, 9480 zone, a bit of a resistance area. We've obviously got the market still in this rising trend channel from back in June. We didn't get the crash after the Trump tariffs thing because he always chickens out with his big announcements. But nevertheless, little sort of sideways action here. 94.20 was the previous call in terms of support. We actually went a bit lower than that initially yesterday, so a little bit of a bear trap, but sort of sideways really the price action at the moment. We were looking for 93.50, the old August-September resistance as potential support, so I suppose yesterday's lows, 93.84, sort of tied in with that. Looking for end of day close above 94.80 to give us a move back up to the top of the channel and a 96.40 target. Best case by the end of next month, which seems rather a long way away at the moment, would be the red May resistance line projection, currently heading towards around 98.20, but maybe at the moment we just focus on near-term price action, so basically 93.50, 94.80. Moving on to the DAX, and here the situation is that we bounced off the 50-day line, which was nice, so a nice sort of hammer candle yesterday. And so we are basically in the same range between the 50-day line, so around 24,000, and the record high levels, 24,700. And not really much to say over and above that, apart from the way that the 50 and 200-day lines are both rising. So we are half full rather than half empty, as is the RSI above neutral 50, which also helps the cause. The Dow is next, and here it's been all over the place, but the main message is that we bounced off the 50-day line, in fact, slightly below it yesterday, which was basically the buying opportunity that one would be thinking of. Any intraday dips below that buying opportunity. Interestingly enough, we've still got some resistance towards 46,400, so I need to crack that. There's a sort of minor resistance line there, I suppose, from the beginning of the month, so that needs to be cracked. And if we can do that, then we would be up for a move up to the top of that rising trend channel from May last year, as high as 48,000. End of day close below the 50-day line at 45,603, and we are looking at potentially testing initial July resistance around 45,000 as support. But that is the worst that we're thinking about at the moment. The cryptos are next. First one is Bitcoin, and here not as bad as yesterday, but still a bit difficult in the sense that we are between the floor of the channel and the 50-day moving average. We want to see a clearance of 116 now because that's been recent resistance, and we don't want to see a break of 110 because that is the floor of the channel. If we do see a break of 110, then I suppose it is a journey back to the 200-day average at 107. That looks to be, or would appear to be, the best sort of entry point area. Maybe if there was anything below that, 104, 105, even better. So we'd get the kind of rebound that we saw in March, April from just below the 200-day moving average. Obviously, the August, September support area, 107. So that ties in with the 200-day line. The negative here is the way that we're below the 50-day moving average and that we've had an RSI failure below neutral 50. So that's still warns us that a test of the 200-day line could be on its way. In terms of the upside, still got that channel there, so still got potentially 134 as a best case scenario target by the end of next month, or I suppose the end of the year if you are more cautious. Ethereum is next, and here it's been a case of trying to consolidate near the floor of the channel. The floor of the channel actually around 39.40. We're between that and the 50-day line, a bit like the Bitcoin situation. The 50-day line there at 43.42, and also we've had an RSI 50 failure, but so far holding up near the floor of that channel, which is kind of what we want it to do. If we can do that and stay above it, then best case scenario target here by the end of next month towards 5,400 and that July price channel top. Gold is next, and here there's no issues at all. We've actually hit our resistance line target, 1 year resistance line target there. The high yesterday, 41.80, let's call it, and come back a bit from that. But at least while we're above the initial October resistance of 40.60, still looking for not only 41.80, but probably a little bit more than that as well in the near term. Seems to be relentless at the moment on the upside, but we'll try and come up with a target when we break the old 41.90 target. Moving on to the stocks, and there's so many, which I apologize for, but it takes more time to actually filter them out than try and exclude them, if you see what I mean. So, or to keep them in the list. So, the first one is ActiveOps, which had an update today. Here we've got a price channel target there, £2.50. We're looking for that while we're above the recent broken resistance of 190. So quite a simple situation there. One shudders to think what the spread is on the stock, but £2.50 hopefully on tap there after a very good update. Moving along to Ceres Power, which wasn't that keen on looking at, but the shares broke my first target there, 175, and the second best case scenario target there, now up to 255, which is what we're looking for as soon as the end of this month. Looks as though there's still plenty of gas in the tank there, and one wonders why the shares are so strong. Eco Buildings is next, with its worldwide push or rollout that it's got at the moment. And here we've got the top of the broadening triangle there at 9.3 pence. We're looking for that by the end of this month, and actually looking for much more, hopefully, given the way that we gapped up off the lows. It was a bear trap gap reversal, and we've held the recent gap, this month's gap, very well ahead of a move through the 200-day moving average, etc., etc. High RSI 50 plus rebound as well gives us the view that 9 pence will be the minimum on the upside on that one. One of the charting highlights of the year, actually, I would say, is Empire Metals, and here an amazing chart. The previous call was that while we're below the low 60s, we still have a chance of the Lassonde curve kicking in. So it's the end of the discovery phase and going to a more negative phase for the stocks. Yesterday, for some reason, they took out all the stops of the shorts. I would imagine hit the top of the channel there, almost exactly on the nose, which was gratifying, given that it shows that the channel was drawn in the right place, and right back down towards the floor of the channel, which is currently around 42 pence. At least while we're above the floor of the channel at 42 pence, looking for perhaps a move back into the 60s area. But obviously, if you are somebody who feels that the Lassonde situation is in force, yesterday's pullback and today's ongoing follow-through is rather ominous. Worst case at the moment is we break 42 and head down to last month's support at 30 pence. Moving along to Harena, which seems to be enjoying the rare earth miracle that we're having at the moment. We've hit our target there at 2.25 pence, and looking for the next level up, which really should be the highs there, so towards 3 pence. In fact, it could even be more than that, because the upper parallel that I'm drawing at the moment of the first resistance line there is heading for 3.65. Looking for that as soon as the end of next month, while we are above the 50-day moving average, sorry, the 200-day moving average, currently around the 1.9 pence area. So hopefully Harena will deliver the goods on the upside, especially given the recent strong candles, especially yesterday and obviously today as well. So it looks like finally a bit of accumulation happening there. The other point is that we've had double RSI 50 rebound in the last week, and we've also had two before as well. So that is the secret sauce in terms of working out whether a stock or a market will give a small move or a big move. We tend to see multiple RSI 50 and 50 plus rebounds ahead of a big move to the upside. Speaking of big moves to the upside, it's Kefi, and here somebody's asked me what the next target is now that the big target there, around 1.75 pence, has been hit. Above 1.75 pence, above that resistance line projection there from April, looking for up to 2.4 pence by the end of next month. Ideally, we stay on the right side of recent resistance, call it 1.5 pence. So above 1.5, basically looking for 2.5 pence on Kefi by the end of next month. On to light science, and here gap towards the high for this stock. We already had the top of the channel there, 4.6 pence as a potential target there, so obviously we're looking for that by the end of this month. Best case scenario target up to as high as 7.5 pence probably by the end of the year, while we remain on the right side of recent support at 3.9 pence. You can see the RSI holding very firm around the 60p level. So this also looks like a situation which could have a big move. Let's see if the RSI predicts that correctly. Landore is next. Couldn't resist, obviously, looking at a gold situation. This looks a bit like Harena, actually. So hitting the first triangle target. The next one there up to 7p, looking for that by the end of next month, while we remain on the right side of 4.5p. And nice curve in the RSI window there. Basically, we've had four RSI neutral 50 rebounds in the recent past on Landore. Moving along to Mast, which is, I suppose, in the Empire Metals situation in terms of trying to work out whether we're going to turn around or not. We had a false bounce we had a temporary bounce off the 200-day line, which is what you'd expect. But what's interesting here is that we've had much lower lows for the last week, but the RSI almost the same level, so that's bullish divergence. Also looks as though that's the neckline of the double-headed the double-headed head and shoulders formation, if you can call it that. Difficult to spit out. The floor there, or the neckline there, around 17p. Above that, we're probably looking for 37p as a dead cat bounce, maybe up to the 200-day line as high as 42p as the best case scenario target, on the basis that this is a bit of a bear trap situation. Not saying that we're going to go into full recovery mode here, but at least while we're above today's, above the 20p zone, then looking for as high as 42p as a best case there, on the basis of a bullish divergence in the RSI window. Moving along to Nuformix, which I've been championing for quite a while, and luckily the shares are behaving accordingly. Here we've had a sort of a range established around the first target there, 0.26. Above that, looking for up to 0.5p by the end of next month. This looks like a mid-move consolidation, and you can see here 1, 2, 3, 4, 5 RSI rebounds in the recent past. So looking for a big move here while we're on the right side of the 0.25 area. So let's see if that punchy call turns out to be right. Speaking of punchy calls, the punchy call here on Pulsar was that it was going to head for the stars, and it actually has done that. The star in particular was 50p, and above 50p, there's a new target now as high as 80p by the end of next month. That's on the basis of the current golden cross that we've got, and also the way that the shares gapped up through resistance and held that gap, and then found support above old resistance as well. So very, very strong situation there on Pulsar. Petro also looking interesting in the sense that we gapped up a week or so ago through a rising 50-day line, so it doesn't really get much stronger than that. It's a bear trap island reversal, so gapping down back in July and then gapping up this month, so that's a big tick. And also above the initial October resistance of 1.18p on an end-of-day close basis, looking for a target as high as 2.6 or 2.7p by the end of the next month. Not quite sure what would do that, but while if we can get a decent end-of-day close or end-of-week close above the 200-day moving average, just above current levels, then the upside there could be up towards that 2.5p plus. There's a gap to fill there, actually, around that 2.5p level as well. So let's see if the setup is as good as it looks. Rainbow Rare Earths is a stock which has sort of been a bit of a Cinderella in its space. It was one of the first proper rare earth companies, and finally starting to move here. The initial target here was around 23p. Above that, looking for a fresh target at 35p, and looking for that by the end of next month. And the way things are going, might even get that by the end of this month. So very strong looking situation there. After a long time of waiting, you can see we actually gapped up the middle of last month, or the end of last month, off a rising 50-day line. And I think that was the giveaway, really, of a potential move to the upside once we'd broken, obviously, 18p. You can tell it's a bull market in the resources space, given the way that even Red Rock is rising. Decent RNS today. It needs to break, as obviously everyone's waiting for, needs to break 0.04p or just above that. And then we could be on for a move to the top of the rising trend channel base at 0.067 by the end of next month. The other positive at the moment is the way that we've had at least 3 or 4 RSI 50 rebounds in the recent past. That does suggest that for the first time, probably in living memory, that Red Rock is looking like a bona fide bullish situation, at least from a technical perspective. Ideally, we stay above the 200-day line there at 0.033, ahead of a move to the upside. Strategic Minerals has revamped itself and become a critical or strategic metal company. Here we've hit our third target there at a penny, and now looking for the next leg up, which should be or could be as high as the level I'm going to come up with, which hopefully will be achieved over the near term, which would be July 2017 resistance, and that was towards the 2.5 pence zone, and looking for that by the end of next month. So a pretty punchy call there, but hopefully 2.5 pence, and that 2017 resistance could be on its way by then. Looks like a major re-rate. Only back below the old 2020 resistance there, around 0.9 pence, delaying the upside scenario. On to Smarter Web, where all the bears are enjoying themselves, and all the sort of I told you so people also enjoying themselves as well at the moment. Situation here is that we've lost the 200-day line after a few attempts at trying to bounce off that properly. What's interesting here is that we do have a support line projection there from June. That's heading towards the 36 pence zone. Might be a bit low in the near term for that, but at least while we are below the recent support there at 78 pence, there could still be more on the downside for Smarter Web, even though we are now in oversold territory and haven't really been like that since the beginning of last month. Last two are next. The first one is Sanderson Design, which I couldn't resist looking at because it looks as though it might have a proper re-rate here. We've broken through the 50 and 200-day lines. Obviously, there is resistance there at 55 pence, but we could get up to 70 pence while we remain above, or at least on the right side of 50 pence and those two moving averages. Nice bounce for Wildcat Day after the pullback that we had from the beginning of the month. What's interesting here is that we bounced above the 200-day moving average, and we bounced above RSI 50, so that does suggest we are back on for the 0.24 target there, while we're above the 200-day moving average at 0.009. That's it for me today. More updates tomorrow.